Ladies and gentlemen, welcome to the special podcast. Today we have a returning guest to the show, Matt O'Connor. You know him as Matt from Silver Fortune. Go check out his YouTube channel at Silver Fortune for some really awesome economic analysis. And I got to tell you, nearly everybody has been wrong about silver since the end of January, jumping on one bandwagon or another and wondering why silver has not gone off to the moon yet and why silver hasn't skyrocketed in price just yet. And here we are in October 2021, and silver still isn't even above 25 bucks. So to answer those questions about what's going on and why hasn't silver taken off just yet, sometimes it really helps to think about all this stuff without ulterior motives getting in the way, which could be things such as pumping penny stocks or selling financial market newsletters or even promoting paid subscription website services. And I can't think of a better person to help us do those things than Matt from Silver Fortune, who's not bringing his for-profit agenda to the table here during this podcast. Matt, I'd like to thank you for joining us again on Silver Doctors.
Hey, thanks for having me on here, Paul. This is weird. I've never done like the video format before, but I like it. I can think of some people that are probably better than me to talk about this, but I'll do my best talking about silver, and maybe we can start right there. I think that's a good question. It's a question I've been asking myself for the past few months: is why hasn't silver gone up more? Maybe not to the moon, maybe not all-time highs, but what the heck are we doing under $25 an ounce? And I think a good place to start on that topic is to start from what has gone right for silver. In the past, myself and a lot of other people have talked about reasons A, B, C, D, and all the way down to probably Z for things that are made bullish for silver. And if we go through that list, many of those boxes have been checked. Not all of them. In fact, there's plenty of things that are working against silver, which is hence the price. But there's a lot of boxes that we can check. The one that I start off with, because it's like the easiest, low-hanging fruit, is politics. I'm not going into politics, but I've talked about in the past, and a lot of people have seen that, when you have a Democrat in office, people tend to buy more silver. Okay, box checked. He's only been in office for less than a year, but check that box. Okay, going down the list, high silver demand from retail. You can check that box. This has been an excellent year. Even going back to 2020 was a really strong year for retail demand for silver. 2021, we had that silver squeeze earlier this year, that a ton of move into things like PSLV from Sprott, as well as coins, bars, etc. Okay, check that box. Demand continues to be strong, even in the second half of 2021. Supply, right? Supply hasn't shot up because of new price or anything. I mean, it's going to take a long time for supply to really be ramped up over the long term. If price can be sustained, plus $20, plus 25. And of course, 2020 was a really abysmal year for supply because of a lot of the mine shutdowns and some of the problems related to the COVID pandemic. We can go down this list on and on. And there's a lot of reasons for why silver should go up. Money printing, right? The Federal Reserve has continued with their quantitative easing. More about that to come. We'll talk about that as kind of in the negatives box as well for why maybe silver hasn't gone up. But there's a lot of reasons for why silver should have gone much, much higher by now, and yet it hasn't. I think it's always a good idea for investors, for people in the silver space especially, to question their investment and question their thesis. We don't want to just be emotionally married to an investment, to an asset. But I don't think it's time to just throw it out either. And that's certainly not where I'm at either. So I do think we have to question this. And that kind of brings us to maybe...
If I can interrupt you right there, Matt, and
just
ask a question about this, because I remember you were saying this on one of your awesome podcasts, and I don't remember which one it was. It was like your last one or the one before, a recent podcast. I remember you saying, now I'm not capitulating here, so could you just kind of explain that? Like, because I hear yourself questioning it now, but you're not capitulating, and there's a difference. So I didn't mean to hijack your thoughts there, but can you just explain that a little bit more for our viewers and listeners, Matt?
Yeah, absolutely. I think a lot of the fundamentals, and that's mostly what there's a lot of channels, good channels and podcasts out there that focus on things like technical analysis and whatnot, that, they focus on their things, and I tend to focus on fundamentals. Some I've even said, I've seen kind of marry the two together. They'll say, fundamentals tell us what to buy, technicals tell us when to buy. I think that's a really good analysis. I'm just not technicals and stuff like that. That's not my forte. From a fundamentals perspective, though, I don't think things have changed a whole lot. In a negative perspective, we still have high demand. We're seeing COMEX reserves continue to drop. We're seeing strong demand for things like silver eagles. We're seeing probably pretty strong demand now out of the East, specifically India. Certainly for gold, and it remains to be seen if the same is true for silver, but hopefully that's the case. Biden's going to be in office for a number of years, Biden or Harris, and there's a lot of reasons for, why the fundamentals are intact and why I'm not, ready to capitulate on this. And of course, one of the big fundamentals that kind of take us away from just things like supply and demand from the silver space is, of course, kind of the economic perspective of whether from a global perspective or specifically, dollar-centric, U.S.-centric. Inflation continues to be a huge part of kind of my thesis. It has been for a long time, and of course, for a long time, we didn't see it in the inflation data. Now, I mean, we can get into how reputable, how trustworthy that data is that the government provides us. But now we're actually seeing pretty decent inflation, non-transitory inflation in the CPI, and there's no indicator to me that that's going to change anytime soon, especially when we're seeing what's happening in energy prices, which I think we should not just, say, well, energy is volatile, we shouldn't factor it into the inflation. Of course we should. Inflate the energy market's one of the few remaining real physical markets that cannot be as easily manipulated as other markets. From a paper perspective, physical, sure. I mean, you can cut off supply, you can withhold supply, whatever. You can buy a bunch of physical supply in something like the oil or the natural gas markets and drive the price up or down. But otherwise, I mean, one of the few remaining real markets, and so naturally we should expect inflation to happen in a big way in the energy markets. But inflation and kind of the monetary and the fiscal perspective, that's why I'm still. I'm not capitulating on silver. I'm not kind of giving up on silver at this point.
Mm-hmm. Another thing that I don't think people are considering is, it's almost like there's always just enough silver going around the world that it's not like lumber where you just can't get it at any price. And it's not like a brand new, NVIDIA GTX, 3090 graphics card that you can't get at any reasonable price. That's not multiples of retail from some scalper on eBay or something like that. So it's almost like, there's always just enough supply. And one of the things that I think about particularly is, well, yeah, because silver is money. If we think about it at its very most base element, and what money is something that people are always saving, and it's something that people are always spending. So there's always somebody looking to sell silver because they're needing to spend money, and there's always someone looking to buy silver because they're needing to save money. So, is that another factor, or could you explain what you're focused on when it comes to inflation and silver and things like that a little bit more?
Well, I think you could bring up a good point in terms of, silver being a hedge against inflation, and certainly savings for a lot of people, a protection against anything from, economic downturn, inflation, or an individual, losing their job. And I think you see that in a big way in India, especially back in 2020, earlier this year. Economically, their economy was battered, much like many of the other world economies, and their population, of course, being very much into physical precious metals, silver and gold, very much a big cultural thing over there. They stopped buying a lot of silver, and in fact, I'm sure a lot of those families were selling their silver just to make ends meet, keep their house, whatever it might be. A huge amount of the population in India and some of those other countries over there as well. That's how they save. They're not in the banking system like you and I might be, or maybe not you and I, but like many of us are. Their house and precious metals. I mean, that's their big assets. They don't, keep it in a big savings account or, invest it in a 401k or something like that. So I think that's a big part of it. And you're right. I think that's another, big picture here for moving away just from the East. And in Asia, silver is it's had moments, especially earlier this year, and who knows, probably still to some extent today, where it's a very tight market, right? Where the amount of physical silver that you can get your hands on in an investable format, 1 ounce, 10 ounce, 1,000 ounce bars, has been thin, right? But it is quite different in terms of a bit of kind of elasticity in terms of that supply, how much people are willing to sell compared to some other markets. Take the energy markets, for example, where storage is difficult because it takes up a lot of space. The uranium market, you can compare it to other metals like palladium, platinum. There's just not a huge bulk of tons of bullion out there that can just be sold into the market. If palladium goes up by a couple $100 an ounce, I mean, that's just not a significant amount is going to happen. That's not the case for silver. I mean, it is a relatively scarce metal. There is a ton of it that's gone into industrial uses. And, I think some people, their estimate is a little low. I've heard, 1/10 of an ounce for each person on the planet. It's probably more than that, but not a whole lot more. We're not talking 10 ounces. There's not a huge 70 billion ounces out there somewhere. Probably a few billion ounces. And a lot of that's not going to be sold anytime soon because it's held by stackers, held on exchanges, or maybe to some extent by governments to very small amount, but it is a much larger physical market than some of these other commodities. At least that's I think plays a big role in it.
Mm-hmm. And that's very interesting because yes, and I would agree that in a sense that with all those things you said, and it makes perfect sense too, because like when I'm thinking about like things that I can save, and it's not just silver, but like I'm thinking about like, well, if I can buy a couple things of laundry detergent, because I know it's not going to go bad, and it stores in a box nice in my garage and stuff like that. So yeah, there's that aspect as well. I mean, it's so many things, right? It's the ease of storage, it's the fact that it's money, it's that people are using it as savings, that it does have these different dynamics. Because that's the other thing, right? Is like with this energy crisis, right? It's like last week, Evergrande was all the news. This week, it's all the energy crisis. And I have my suspicions about that. But now it's like people are saying, well, this is it, right? This is all silver needed was the energy crisis. But I thought 2 months ago, all they needed was the default on the COMEX. And I thought 4 months ago, all they needed was they were going to break the bank because of the squeeze. And I thought 6 months ago, it was because of some other reason. So it's like, it's always like some reason that's just right around the corner that silver is going to skyrocket. And yet here we are sitting here under $25. So like when it comes to just this energy dynamic and silver, and now everybody is certain that this energy dynamic is what's about to launch silver to the moon. Just could you expand on that a little bit more there, Matt? Or did you have any thoughts you wanted to add?
Yeah, well, I think first of all, you make a good point. It's always something, right? I think I always come back to the fundamentals from a supply demand perspective, which I think invariably have been bullish for many, many years now. Both over the long term and at points over the short term, and as well as the fundamentals from an economic perspective, monetary policy, fiscal policy, and inflation. If you look back at those things, one of the things I've been talking about recently in my podcast is the Federal Reserve, and part of looping back to one of the previous things we're talking about, why hasn't silver gone up? And a big part of it is the narrative about the dollar and the narrative about the Fed and this taper, right? By the way, I think this taper is going to possibly begin. I'd be surprised if they finish it. I'd be surprised if the Fed got to 0 QE on a monthly basis. And if you look at the repo market, continues to rise. The usage of the I forget if it's the reverse or the repo market, but it's their support for the markets isn't going away. Last time we saw them tighten ever so slightly in terms of raising rates and reducing the balance sheet before we ended up in the repo market crisis, and then of course the pandemic. This time around, I'd be surprised they might maybe get to like 0 QE and then the market blows up, right? But the Fed, they have an answer for most things in their mind. Between the Fed, the federal government, governments abroad, central banks abroad, they have answers to, in their mind, to unemployment. They have answers to economic malaise. They have answers to a lack of stimulus in the economy, right? Spend money, print money, helicopter money, lower rates, whatever it might be. But the one thing that the Fed doesn't have an answer to is inflation. In reality, they do, right? They can raise rates. They're not going to. They can't raise rates reasonably. And, if you look at what was required in terms of raising rates to stamp out inflation back in the late 70s, early 80s, we're talking, Fed funds rate over 10%, and that's not, over 1%. The global economy will probably collapse at this point, right? It was getting pretty dicey back in 2020 before the crisis, before pandemic, with rising rates and whatnot, and we're in a worse position now. And so the one thing that they don't have an answer to is inflation, and inflation invariably is going to be what happens to the major world currencies, the euro, the dollar, the pound, etc. As a result of these fiscal and monetary policies. And so that's what I always kind of come back to as kind of the big thing that just hasn't changed, right? The supply and demand for silver continues to be bullish, and the monetary and the fiscal perspective continues to be bullish over the long term. With all that being said, you asked me a question and I already forgot it.
But okay, but although you're bringing up some thoughts of mine, so I just want to roll with this for 1 second, because before I forget, this thought that you're making me think of is, it's interesting because the Fed's always like everybody's always like, do something. The Fed needs to do something, right? Like, and it's usually with the stock market crash. The stock market crash is like crashing, and it's like, well, the Fed's got to do something. And I'm looking at like this Evergrande thing and this market contagion, this and that. And I mean, you're still only down not even 10%, like when I ran the numbers yesterday on the Dow, I think it was. But I mean, the stock market's by no way crashing, right? It's not like lumber or other things that have absolutely crashed in price, but it's interesting because, you're making me think that, I mean, possibly the Fed, I do think they will try to taper and not even raise rates, even though some people would argue that it's a subtle way of raising rates. But it seems like there's so much talk about inflation and so much worry about inflation that to do something this time is going to be for the Fed to taper. And then that way, once the Fed tapers and then the markets start coming down and there's pressure on the stock market because of this, drainage of liquidity and this tough monetary policy, even though it's not really, but just for the sake of what the mainstream would argue. So first they're going to say, do something. The Fed's going to start to taper, as you were saying, maybe in November, maybe in December or soon. And then all of a sudden the markets are going to have problems. Then they're going to say, do something. Then they're going to cut. They're going to do even more QE. And then it's going to be right back to, well, see, I mean, we tried. We were doing what we were wanting. And now we've got these problems again. So it's kind of like a convenient excuse, or where am I off of my thoughts there, Matt?
No, I think you're absolutely right. If, we won't get into, conspiracy, but if there's somebody that wants easier monetary policy long-term from the Fed, more fiscal stimulus from the government, then what you should be rooting for right now is probably tighter monetary policy and tapering. The Fed and other central banks and governments, they've created an incredibly fragile system. You see it right talking about Evergrande over in China, an incredibly fragile system that they've created because of how highly levered the system is and how highly dependent it is on fiscal, here in the United States, especially fiscal stimulus and monetary stimulus around the world, highly dependent on that. And it creates a very fragile system where, like you said, you see a 10% pullback in the S&P and people are saying, well, the Fed's got to do something, right? Maybe knock off with this taper talk, right? And inflation's bad, but I mean, at least it's not a 10% pullback in the market, right? That's how some people might view this, right? It's always do something. It's an incredibly fragile system. And it's always with the intent of taking, seemingly, if you're looking, how I see it, how the Fed has operated for a long time now, has been really taking two major principles in mind. First of all, choosing what's most expedient over the short term, rather than what's most prudent over the long term. And the other one would be to take, the normal business cycle, the normal, whatever you want to call it, business cycle, credit cycle, boom, bust, whatever, and replace that with a never-ending credit cycle, right? A credit bubble, and that's what you end up with. And it's almost a sort of like a magic, right? It's almost like an alchemy. Like they're trying to defy economic laws. Like this is just how things work. They've worked since the beginning of time, and of course it's going to fail. And that's what they're trying to do. Is they're trying to replace that with a never-ending increase in credit and liquidity. And any threat of removing that is, we're going to see quite quickly, just how fragile this system has become in 2021. Heck of a lot more fragile than even in 2020 because of how more levered we are and how much more, addiction there is to low rates and stimulus.
Mm-hmm. Very interesting points. I would agree with what you were saying there. Definitely about with the Fed and their policy and the cries for people to come in and help. But shifting gears kind of here, it's also like, but one of the problems is, but there's the cries for do something and the Fed should do this and people make their strong statements. But when I'm watching the FMC, it's kind of also like, you know, I don't want to sound crude or anything, but there's a lot of butt kissing of the Fed that goes on, right? And there's a lot of like propaganda that goes on, and there's a lot of like the questions, I mean, they're not really that hard. It's like they ask a question, and it's not like questions like maybe from 5 years ago or 10 years ago, where if a reporter asks a question, they're going to be fired and never invited back. It's like the same exact people every single time. They're not rocking the boat too much. You know, it might seem like they get up in the boat, but they're not rocking the boat, definitely, when it comes to the Fed. So that's just my thoughts on another reason why there's also just kind of like confusion in general about like all the different crises that we're in, like between the inflation or between, you know, why are some assets going through the roof? Why are some assets crashing? Why is there this rise in cryptocurrencies? Why, like all of these things, there's this confusion. Mainstream media isn't helping with that. Did you have anything you wanted to add on to that, Matt?
Yeah, no, I think you make a good point. I mean, I think there is a lack of maybe critical thinking and good questions regarding this from the mainstream media. These people the people reporting on this, you know, economic correspondence or whatever they might be, they should, or they do have a good knowledge of history. They should have a good knowledge of history of the Fed. I'm not talking like 100 years in, but I'm just talking like the last 10 years, right? The last 20 years, you know, go back to the Greenspan, right? Let's just go back to the Greenspan era, you know, Bernanke, Yellen, and Powell. You know, that alone, you know, you can ask a question in 2021, you know, okay, Jerome, you're talking about a taper here. Why should we think that this taper is going to be any different than how the last taper happened, or the short tightening cycle? You know, like that would be a totally valid question, and you just aren't seeing those types of questions necessarily being asked. And there's a lack of, I think, critical thinking about the Federal Reserve. We saw shades of it at times in the past 5 years. Unfortunately, it was almost always colored from a political perspective, right versus left dynamic, which I don't see the Fed as kind of like a right versus left type of entity. It can be at times based on appointees and whatnot, but as a whole, not really. You know, you saw it during 2016 when Trump was running against Clinton, and he, you know, before he was president, he attacked, you know, basically the Fed basically said they're keeping this bubble afloat. And I was like, yes, absolutely. But then once he was in office, and again, I'm not trying to get political here, but he cheered on easier monetary policy. And that's one of the big problems with a Fed, a Federal Reserve, or any body, governing body like a central bank, is that they have such a potential to be politically motivated, right? Now, again, I don't think that invariably they're just left versus right type of deal, that Powell's a big liberal or a big conservative. But the point of it is that they have an immense amount of power, and it's so easy for that power to be manipulated on the basis of basically what's most expedient, what's most politically expedient and comfortable over the short term. And you see it in places like Turkey. You see their central bank. You know, you look at the central bank of Turkey, and it's like, well, yeah, that's an absolute crap show over there, right? They're cutting rates when they definitely aren't supposed to be, right? You're seeing, I think that's the central bank where you're seeing a lot of nepotism, right, from the Erdogan government, and you know, any rational person would look at that and say that's a huge problem. And yet when they look at the Federal Reserve, or look at the ECB, look at the Bank of Japan, and those same type of rational, you know, critical thinking just isn't applied. It's not applicable. There's not a whole lot of questioning of this economic framework, which is so important for our daily. We're just seeing that type of dissent from people on the basis of politics, right? The right is, of course, going to say tighter monetary policy when a Democrat's in office, and vice versa. And then you're seeing it from a bunch of, you know, whack jobs like you and I on the internet. That's, you know, kind of asking some of the deeper questions about, you know, maybe we shouldn't have a Fed, or maybe, you know, we need different rules in place in terms of their powers and whatnot.
Yes, I would go with the former. I would definitely go with the former, not the latter on that statement, but I would go with the "we don't even need the Fed" type of statement.
I completely agree.
So shifting here to something a little bit more uncomfortable. So let's put the focus on the silver market and silver advocacy, because, you know, I've been having like internal problems with this lately, and a lot of people don't know this. And like, I'm not paying you for this interview right now. You're not paying me for this interview right now. We're just discussing silver, and we're trying to be silver advocates that are like genuine. That's my opinion. I assume that you are, and I think that you are. But like, I think about like channels that are fast rising, and I don't want to put you on a spot or have to name people or anything like that. But I think about channels that have come up fast rising or this and that, and it's like, I mean, it's like an infomercial to me, and they're paying some mining company CEO, and they're saying, well, hyperinflation is coming next, and the dollar's going to die, and this and that, and here's our updates on our latest exploration efforts, and it's like a bad infomercial, and it's like, I just think that like, just kind of like the way that the mainstream treats the Fed and gives the Fed these kind of free passes and stuff like that, like I've been feeling lately, which is another reason why I haven't talked a whole lot about silver and podcasts over the last couple months, but I've been feeling lately that just there's just this disconnect, and there's this just like loss of sincerity in the silver advocacy movement, for lack of a better term. You know, I see stuff as like people are pumping the penny stocks, and that's not good in my idea, because, you know, you got someone who bought silver when the silver squeeze was happening at 26 or 28. Now they're looking at a price that's 22.50, and they're like, well, this is terrible because now I'm losing money. I'm not even flat or even up. I'm losing money. And then they're like, well, what you got to do is you got to get into trading options and this and that. And then they blow up their trading account, and then they leave, and they never come back right at the time when they're going to need it the most. So I'm seeing some, like, I don't know whether you want to call it insincerity or lack of sympathy or ulterior motives, or, you know, I don't know how exactly you want to classify it, but are you seeing any of these kind of things with the silver advocacy movement? Are there any problems with the silver advocacy movement right now, Matt?
You know, I think that is a real problem. It's something I tend to filter out or don't watch. You know, if let's say they have Keith Neumeyer, right, or let's say somebody from Sprott or something like that, you know, on a podcast, you know, I have no problem listening to that. And if you have a mining CEO who happens to be a hard money advocate, and maybe that's part of why he's a you know in the mining business, then great. You know, I might watch that too. But I think you're right. You know, if you're talking about penny stocks, if you're talking about real speculative junior miner, you know, or especially exploration companies tend to be especially speculative. Yeah, I think you're right that the potential for not just conflict of interest. It's so hard to measure conflict of interest, because you could say, well, like, they're not paying me, I'm not paying them in that instance. But you know, if you're a big podcast, big channel, big blog with 50,000 views on a given article or video or something, and you interview somebody in a very low cap, small cap, micro cap, you know, exploration company, then yeah, that stock might go up the next day, and then you can, you know, sell. It's very easy for something like that, and it happens all the time in, let's say, like the crypto space, right? We saw it for a while in you know, maybe certain meme stocks, but especially things like, for a while, like marijuana stocks, you know, those real small cap stocks that could just, you know, rip really easily with a small amount of capital invested. And I think it is a real problem. I think, you know, we never want to throw out the baby with the bathwater, nor should we, you know, always just assume the worst about some of these content producers. But I think you're right that viewers, readers have to look at this and really question, you know, why are they in precious metals in the first place, right? Protect your wealth, and maybe some other reasons as well. Get rich. I think that's not necessarily a bad perspective, but you have to be realistic about it. And a lot of these really speculative exploration companies can amount to a lottery ticket, essentially, right? If you're talking about a junior mining stock, you know, like that has production already and proven reserves, and they happen to be a much smaller cap than, let's say, like First Majestic or Pan American or something, like that's fine, right? That's much more speculative than First Majestic or some of these larger mining companies, but that's fine, and you're going to get more volatility with that, right? If silver drops to 15, you're going to be in, you know, maybe in a world of hurt. But if silver goes to $50, right, you're probably going to have possibly more upside with that than maybe some of these larger mining companies. But yeah, if you're talking about highly speculative companies, it's not something that I'm into. I see it as akin. I just don't have the time to research all that stuff my own, and so inevitably I'm left reading somebody else's work, and I don't know if I can always trust that work, right? You know, drilling results and whatnot. That's
They've always got great drilling results, right?
Yeah.
They're always got high grade silver they can tap into. It's like, this has been going on for 10 years. That's what I don't understand. Like, Like 5 years ago, they were called Canadian Mineralized Exploration Unit something. And then 3 years ago, they changed the name to something Plata. And now their name is something Silver. And they got these great drill results. And because that's just what I wanted to say, right? To just kind of make my point, my statement go a little bit further is that because people were lumping gold, silver, and the miners. And when I say miners, I'm talking about it all kind of lumped together. So I'm saying the exploration companies, the juniors, the miners. People lump this all together like it's the same thing, and it is not the same thing, right? I think that, people have kind of come to understand, or I don't know if people have come to understand or not, but that Bitcoin is not the same thing as gold. I mean, most people in the mainstream don't, but in like critical thinkers, I think they would understand that Bitcoin does not equal gold, right? It's kind of like Impossible Burger is not meat, right? So like Bitcoin is not money; it's other things, yes, but gold and silver is money, especially if you're an American and you believe in the Constitution. But my point is that people were lumping the miners in there as if it's the same exact thing as gold and silver. And see, I don't think that you can even compare it. And especially with all of the problems that we're seeing with like mine strikes, worker strikes, mine shutdowns, mining permits getting pulled. Just the fact that I was reading this, I can't remember what the name of the silver company was, is one that they keep pumping recently a lot. But I was reading the Q2 finance reports, and when you look at all the fine print, it says we can release an unlimited amount of shares into the market. So they probably just have to disclose that, and there you go, they're diluting the float and reducing the value of the shares. Or the other thing is, they got all these warrants and private placements that, like, I don't have $1 million to sink into this exploration company, so I don't get these warrants, where the price is 40 cents now, and I get to exercise these warrants at 16 cents and then sell them into the market. Like, all this shenanigans stuff is going on. And all of these people that are interviewing these CEOs and stuff, they're essentially promoting all of this, but really it's just like, how is this not just a massive pumping up scheme? What am I missing here, Matt?
No, I think you're absolutely right that that's what it can be, and I think, unfortunately, I think you're right in saying that precious metals mining stocks and precious metals, two very different asset classes, they're going to rise generally and fall in tandem. You're going to generally have more leverage in the sense that it's going to go up more or less with mining stock, but you're right. You're dealing with a lot of counterparty risks with mining stocks, right? You're dealing with management, you're dealing with jurisdictions, you're dealing with economic pressures that just aren't going to be felt by a hunk of silver, right? And so you're right, and then this idea of just kind of this pump and dump scheme. I mean, yeah, that's a real concern, right? I think there's reputable people out there that have newsletters and have really good subscriptions, and some of them are crazy expensive, right? But they also do their research, and they also know that their name is on the line. But then there's a whole lot of other people who don't have a filter on that, right? Just like for many years and probably still today, there's a whole lot of people out there that are going to have any, random cryptocurrency, and they're going to, pump it. And hopefully we're past that with cryptocurrencies and NFTs and all that, but probably not. There's NFTs, that's 2021, 2022, there's gonna be something else, and it's gonna blow all our minds. And we're like, well, it's kind of the same old, right? And you see it, like I've been getting into uranium lately, uranium mining stocks, because you can't buy the physical uranium, obviously. Although, one of the big things is that Sprott's got their, physical uranium trust now, which is kind of cool. And Sprott's a company that I find to be, fairly reputable and whatnot. But if you look at the previous uranium bull market, just like past silver and gold bull markets, you see all these companies coming out of the woodwork during a bull market, because there's so much more capital in the space and so much less discretion that's used. And unfortunately, I think we'll probably continue to see that if silver continues to rise. It takes discretion. It takes a real evaluation of what you're looking for in the asset class.
Mm-hmm. Very interesting dynamics. And would you also agree, like another thing is, like, people are lumping gold and silver in the same thing as crypto, because that's not the same asset either, because it's almost like there's a reason why people are confused, because here I guess here's the question, right? Here's the question, because people try and tell me all the time, well, you just don't get it. Any advocacy is better than no advocacy at all. And I don't believe that anymore. There might have been a time when I believed that, but I don't think that any advocacy about silver, if you're sitting there pumping mining stocks or talking about, this cryptocurrency is the new gold or something like that, I don't think that any advocacy about gold or silver is helpful. Would you agree with that statement?
Yeah, absolutely. I think it takes a long-term perspective. And you're looking for something sustainable in terms of advocacy. What I mean by that is if you are making statements that over the next 6 months, over the 12 months, is going to turn off this viewer or this reader entirely to the space because you were just so wrong, or they look back and they're like, well, this didn't sit with me right. There was some kind of conflict of interest here, whatever it might be. You've possibly turned that person off to precious metals, for the rest of their life. They see it as a scam, right? The precious metals space, unfortunately, has been rife with scam over the past, several decades. And so, yeah, I think that's a huge risk. And you need to have a long-term perspective, and you need to have people in it, not just because they want to get rich, right? Or because they want to turn $100 into $1,000 in a 1 month span, right? You're looking for people that are going to be hard money advocates, people that are in for the long term because they understand why they're buying it based on fundamentals and not based on, well, this is, the investment of the day. And I think this, I would say the same is true for cryptocurrencies. Broadly speaking, not just from a cryptocurrency perspective, I'm not a huge fan of cryptocurrencies, and I do think that they are quite different from precious metals, right? It should be lumped together. In a perfect world, we could see a system where people have freedom of choice over currency, right? You have, sure, a government central bank currency, but how cool would it be also to have, a good, easily exchangeable precious metals type currency? You can have cryptocurrency. You could have, some other, foreign currency, whatever it might be. You have kind of that freedom of choice. And so, in that sense, I'm not entirely against against cryptocurrencies, and I think they have a real world use. It's a cool technology and whatnot. But I would agree, they have entirely different asset classes. The only thing they have in common is that they're, an alternative currency. But of course, cryptocurrency doesn't meet that standard of being money in my mind.
Mm-hmm. Right, it doesn't, and I should clarify, and it's really not just cryptocurrency. It's more Bitcoin, right? It's more like gold, silver, and Bitcoin. That's more the general lumping. It's not gold, silver, and crypto. So I probably even said that wrong, but I think your point comes across as the same. And I really do like your point about, it's a long-term thing and it's a process. And learning about gold and silver, it is like what I knew 5 years ago, what I knew 10 years ago, what I understood, more importantly, is not the same as what I understand now. And I think that, I'd like to feel that I've matured, right, in my understanding of gold and silver. So I like the idea that you're saying that it's a long-term process. And then, did you have anything you wanted to add on to that, or does that sound?
Well, I was thinking even, back to earlier this year with like the Reddit silver squeeze movement, a lot can be said about that. And I think, if we're looking here in October of 2021, I think a lot of those people that were into that, whether they came from Wall Street bets or whatever it might be, they don't own that. Those that never bought the physical silver probably don't have any now. Those that bought, PSLV or SLV probably don't have it. Those options are probably expired. And if they're not, they probably don't have those in their portfolio anymore. And yet, I am pretty confident in saying at least that there's some amount of those, however many thousands of people that are probably kind of come over to this side. They've kind of, maybe it's a couple thousand, maybe it's 10. I don't know exactly what proportion it is, but of those hundreds of thousands, yeah, there's probably some that are now, into precious metals for the long haul. And maybe, even if you look at like things like Silver Eagle sales and maybe even that's representative of it. Some of the silver kind of continues to be drained from the COMEX. Maybe that's partly related to that. The flip side to that, though, is like I was saying, there's probably tens of thousands of people that saw silver as maybe not a whole lot different than investing in marijuana stocks, Bitcoin, altcoins, as kind of like a short-term play. Let's see if I can triple my, and it didn't work for them, for most of them in silver, because silver doesn't, and even the stocks did not move to the nearly the same extent as some of those other assets did.
Or the meme stocks too, right? Like the
meme stocks, absolutely, GME and AMC and all that. Yeah, and hopefully not, but I mean, it's a real potential that those people now see precious metals as just kind of something to play, just another stock market play and nothing more. And they're kind of turned off to it as any sort of, or worst case scenario, they just see it as a scam. This big silver squeeze movement, which is pushed on us by a bunch of people with an agenda, and that would be really unfortunate as well. But hopefully that there was some people that kind of came over because of all of that.
Definitely. And we're kind of talking about like long-term understanding and long-term knowing, but let's dial it down here to the short term, because I want to just talk about this for a second, because it's interesting, right? Because, people get mad at me when I say this term, but I call them chart huggers. And a chart hugger, now I love charts, right? I love charts myself. I use lots of charts and articles and stuff like that, but I'm not a chart hugger. And what a chart hugger is, in my opinion, is something who is clinging on to that technical analysis as their trading account is going to zero and getting blown up, right? Because, you buy an option and, if price moves against you, then you still have that money, but it's essentially worthless until that option expires, right? Because that's how options work, right? If there's no buyer for it, then the price is zero. So that's what I call a chart hugger, someone who's clinging on to the technical analysis. So aside from people like that, or people who are just purely technical analysis with no notion of the fundamentals at all whatsoever, that's what I would call a chart hugger. And I don't think it's a derogatory term, but my point is, aside from those who have been flip-flopping, right? Since the end of January, I was saying silver in the teens. Let's get ready for silver in the teens. I was like, oh, that's never going to happen. And I mean, we're closer to silver in the teens now than we have been. And we're definitely closer to silver in the teens now in October than we are to silver at 30. But here's my point. My point is that, everybody is so sure now, right? As soon as we dropped below 24.50 last week, 21.50. As soon as we dropped below 21.50 last week, everybody's like, this is it. The bottom's in. This is it. The bottom is in. We're off to the moon. I mean, sure, it's Golden Week now, but we're about to take off. We're about to shoot off like a rocket ship. We're about to rally. And, people forget, are people's memories this short that in October of 2015, I think it was the 29th was when it started. It was 14 down days in a row. And that wasn't even when silver hit the bottom, which is no longer even the bottom anymore. But it hit the bottom in December 2015. But it's like people forget just how much pain there can be in the silver market. And that's what I'm concerned about right now. I'm concerned that I haven't seen this widespread, deep capitulation where, and you used to know the names from 5-6 years ago where they say, I've thrown in my towel, I threw all my silver in the pickup truck and I sold it. Now I'm into crypto and now this or that or this, you saw that kind of really hardcore capitulation. And I would say that was more like in 16, 17, but we have not seen, and if you think about it, we kind of need to see it because in March of 2020, silver took out that December 2015 low, right? So in my opinion, that's where my concern is. People forget just how agonizingly brutal and painful the pain can be in the silver market. But at the same time, everybody thinks that, we're set to the moon any day now. We just got to get past Golden Week. And then probably on the jobs report, it's going to come out crummy and it's going to take off like a rocket ship. But so I guess the question is it ready? Is silver going to the moon, or why is silver not to the moon yet? Or what are your thoughts as we move into the end of the year in the silver market in general? What are you looking at? What are you thinking about, Matt?
Well, I mean, I think first of all, it has taken a beating lately, and if it can't kind of clear probably some key technical levels that I'm not qualified to kind of like pick from the charts, I wouldn't be surprised to see it drop to 20. I mean, that's a nice round psychological level, $20. If it goes below that, we could see $18, right? And into the end of the year. That's kind of my timeline. If it's going to drop more, I would see it through the end of the year, right? I think that taper narrative can continue through there. This inflation is transitory narrative, we're talking fundamentals here, that can continue through that time. If you're having any sort of deflationary effects on the markets, which tend to have can cause sell-offs in precious metals, whether it's because of Evergrande or from an economic perspective. I mean, people are talking recession again here. Who knows if we ever left one, but with the debt ceiling talks, and of course seasonality. December and November tend to sometimes be really bad months for silver historically. Not, if you look at an overall seasonality chart, they're not some of the worst months, but historically in the past 5, 6, 7 years, that's where sometimes we've put in some of our lows, is like November, December. And so yeah, $20, maybe even down to 18. If you're looking at charts and kind of looking for, easy to pick, not talking Fibonacci levels or anything like that. But then heading into next year, that'd be kind of where I'd be looking at. If silver finds that kind of bottom, we see capitulation, especially, and probably miners and whatnot, then that would where I'd be kind of looking for the next leg up. But that might not necessarily happen, because again, there's plenty of fundamentals for why silver shouldn't be where it is right now, let alone a full $3 or $4 lower. And so that's my roundabout way of saying I have no clue at this point, except that I know the fundamentals are strong and continue to be strong. And that hasn't changed regardless of the latest narrative, regardless of, we haven't said this word yet in our podcast today, but manipulation, regardless of manipulation, if you throw all that out and you still got strong fundamentals, right? You still got good supply and demand perspective. A lot of people that are in for the long haul. The Fed, central banks are going to continue to print money to the moon, and that's it's an eventuality, but it's not. It's so hard for me to put a timeline on it. I'd still expect to see silver up to above 25 in the first quarter of next year, kind of just based on some of those factors.
Very interesting insight. I appreciate that. And last question here, Matt. I got to admit something, right? I got to admit something. And what I'm about to admit is I used to be into zombies before it was cool to be into zombies, right? I used to like zombies, and I used to like reading about like the zombie apocalypse and stuff like that. And it's like one of my favorite genres. Like I like the whole survivalist type of genre and stuff like that, the whole prepper type of genre when it comes to writing. And I think this is so cool because you're writing a book now. So I kind of want to actually just ask you about that, because I noticed in your podcast, at the beginning of your podcast, you're starting to talk about this book that you've been writing. And I wrote a book. Nobody ever read it, but that's beside the point. And it's horribly written, and it needs to be updated, and needs to be proofread. But that's not my point. My point is, I really like the survival genre and the prepping genre, and especially the zombie apocalypse genre. And I used to before they changed the definition of what a zombie is, right? Like a zombie doesn't run, a zombie doesn't have feelings, right? Like, anyway, that's beside the point. Here's the point. What is missing from all of the survival fiction genre, from the post-apocalyptic genre, from the zombie apocalypse genre, is an actual understanding of silver, and not silver, but just money in general, and coming into because it's always about like the weapons or the gear or the prepping. And it's like, well, John ran out of, 5.56, but his buddy next to him holding down the mutant zombie bikers, that he threw him a magazine full of 223, and it worked just as well. So there's always this intricate detail about the weapons or the prepping or the this and that, but they're always just totally lacking on the understanding of like the economy and the markets. So could you just tell us a little bit about your book? And like, I don't want you to spoil it, but
yeah, copy right here. Yeah. Okay.
Sweet.
Zero sum. Yeah. Zero sum. You're right. It's what you call like a post-apocalyptic thriller. We're moving away from like the massive, meteors striking Earth or zombies or something like that, where, the point of it is basically kind of an economic, political, societal collapse type of thing coming together, right? Because I don't see how one of those can collapse and the other two can stand, right? All three of those things kind of collapse in this book. And you're right. My point in this is to really focus on the factors in play here in terms of, economic, societal, economic, how those things fall apart as it relates to the characters, because nobody just wants to read it like a history book. And you're right. I went into this thinking, I don't want to write it about like, how many weeks of food do they have left? What type of caliber did he chamber? What type of caliber is his gun chambered in? I mean, those types of things are interesting. I remember years ago when I wasn't even 18. I was probably like in junior high. I had this cousin who's same age as me, and he was into prepping back then. And he handed me this book, and I forget the name of it, but I know it's kind of like the reference example of prepping fiction, right? Apocalyptic. It's like Patriots Homestead or something like that. I forget the name of it. And that's what it was. It was super interesting, but it was all about like these people that had this homestead, and it was decked out like probably $500,000 sunk into this homestead that just played out perfectly for them, and to survive this apocalypse. And the point of this book is to kind of move away from that, move away from all these crazy disasters, which might or might not happen. I'm not holding my breath on the zombie apocalypse. Instead, talk about some characters. Two of them are like guys that are in the like they work for the big banks, basically, right? and they kind of get caught up in this, right? Another one's like an aid for a major like political figure. Then we got kind of some of the kind of the average Joes living out in the countryside, and kind of how they kind of negotiate all of this. And it's something I've been working on for a year. Finally, like super close to finally getting it done. My narrator just finished it yesterday, so we're just waiting for Audible to basically approve it, and then it'll be available on Amazon. We're gonna have it in paperback, hardcover. It's gonna be a Kindle ebook, audiobook version. I think that's gonna be on Audible, iTunes. I think there's some other random platform on Amazon as well. But something I'm really excited for, and something I'm excited to continue. It's the Civil Strife series. That's why I'm calling it, because I think that kind of really sums up what's going on in this book. And it's just book one, right? So we got many books to come still in this series.
I think that's awesome. And I think that's great. And I can't wait to actually read the book. And I know you can read it right now as digital. I actually like books, but for various reasons. But the point is, I think that's awesome, because I think that we're missing that, and especially something that has that dynamic, because I would totally agree with you in that, yes, like you can't really separate the social, the political, and the economic collapse. It's like a collapse of all of these things, in my opinion. And that's literally what I think we're experiencing here in the United States right now, which is like this rolling socio-political economic collapse. So I think that's great. I can't wait to read that book, and I hope that it'll inspire people more than anything. And it's just me talking, but I hope that it inspires people more than anything to think critically about these topics, because I think that just in general, that's what the genre can do great. But where the genre has been lacking for people is just like a better understanding of economics and the markets, and why things are the way they are, beyond, how to properly store rice, or, what's the best caliber for getting your arsenal ready for your family. So I think that's great, Matt. So just, what do you want to wrap us up with here? What are your final concluding thoughts? It's great to have you back on the show, and kick us off with something here where you're looking at as we move into the rest of the year. That's not silver. Is it the energy crisis? Is it the inflation? Or what's going to be on your radar until the next time that we talk to you soon here, Matt?
Yeah, I mean, I think before the show we started, we talked about the energy crisis right now, and how we can't really separate that from inflation. Maybe we talked about that on the show as well. You can't separate that from inflation. I think what we're seeing in natural gas, uranium, oil, coal is linked with inflation and some of the dynamics that are in play because of that. Yes, there's supply chain. Yes, there's in the case of Europe, less natural gas flowing in from Russia, which of course probably has its own political reasons for that. Yeah, oil can be manipulated by OPEC, all those reasons. But I think inflation, we can't just throw it out and say, well, we have inflation. We don't factor in energy into that because it's so volatile, right? We're never going to get an inflation reading. Well, I think we have to, because it's one of those markets that we should expect to see inflation, maybe more so than almost any other market, right? It's up there with real estate. It's up there with other somewhat commoditized consumer goods, like cars, right? It's obviously up there with precious metals, food prices, those types of things, healthcare costs, housing. That's where we're going to see that real life inflation. Obviously, there's asset price inflation in the bond market and the stock market too. But inflation as a whole is really what I'm looking at. Is this transitory or not? I don't think it is. And like you said earlier, you put it very well. People are always asking the Fed to do something. Well, what happens when they're saying do something about this inflation problem? And people realize, well, that's like the one problem the Fed doesn't have a good answer for, because they can't raise rates reasonably. A quarter point, half point hike, that's gonna crash the market, right? And that's not going to put a dent in inflation, right? The only way they'd be able to stop it is a full-blown, deflationary collapse, and that's not palatable for them or most people.
Or, as I like to call it, it's not the path of least resistance, which inflation
not at
is.
all. Yeah, absolutely. It's not. It's the absolute opposite of what's most expedient over the short term, which is always would seem to be what they're looking to do. It's been their MO for years.
Well, there you go, folks. And I would definitely agree with what is on Matt's radar, because it is on my radar too. And if it is not on your radar, then believe me, it will be on your radar very, very soon as we move to the end of the year here. Matt O'Connor, you know him as Matt from Silver Fortune. I'd like to thank you for joining us again on Silver Doctors.
Absolutely. Thanks for having me, Paul.